Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario on the daily time frame, where we are looking for a 3-wave corrective structure, after which we expect continuation to the upside. Wave A here is a 5-wave leading diagonal looking for a 3-wave B to the upside, where the most common target area for your wave B is between the 382 and the 886 Fibonacci taken from the start to the end of your wave A, giving you a target area between 63.1k and 71.9k. Preferably, this wave B is also ending after the 0.382 Fib time, also taken from the start to the end of this wave A, comparing A in time with B in time, and the 382 is sitting on the 19th of May. After B, we are looking for an impulsive structure to the downside in a wave C, preferably on a high amount of volume to create some fear and panic, after which we then want to see price continue its trend towards the upside. The most bullish scenario, however, is that this is your low and this is your wave 1, 2, and you look for a continuation to the upside. The invalidation is simply taking the low here at 56.5k, and of course you want to see the all-time high taken. If we then move to the 4-hour time frame, then this is what you're looking for here: an A or 1 to the upside, a 2 or B, and then continuation to the upside. In this particular scenario, wave 2 or B is not yet finished. So the common target area for your 2 is the pink box here, the 05 to the 786, taken from the low to the high of your wave 1, giving you a target area between 61k and 58.4k, with the 886 still being a common target for a wave B, but very rare for a wave 2. Inside this wave 2 or B, we are then looking for a 3-wave corrective structure to the downside, where we have a potential double zigzag WXY. So your first ABC is already finished, looking for a wave X to the upside and then another zigzag to the downside. In a double zigzag, the 0.7 would be a maximum target for wave X the moment price moves towards the upside and hits the 0.7 taken from the high to the low of this wave W, sitting at about 63.9k. It significantly reduces the probabilities for this WXY and increases the probabilities for price to move towards the upside. When we look at the resistance levels to the upside, we first of all have this small white box, 62.2k to 62.4k, and then we have this blue box here, 62.8k to 63.1k. After wave X, we are then looking for price to move towards the downside and hit the support areas that we have here. First one being 59.4 to 60k, and then wave Y over here, that potential target could be around 57.9 to 58.3k, which is in confluence with the 786, still a common target for a B as well as a wave 2. Also, this wave X here is already longer than the 0.382 Fib time, taken from the start to the end of this wave W, comparing W with wave X, so that is positive. It is good to know that wave X can be any corrective structure, so it can be a zigzag family structure to the upside, which is most common, but of course also flat or potentially even triangles, but that is low probability based on the local price action that we have. The most bullish scenario is that you have a finished 1 or A, 2 or B, and you're looking for a wave C or 3 towards the upside to at least take the high at 65k. What is uncommon, however, and impacts the probabilities for this scenario is that the low over here is made just above the golden pocket. It didn't actually hit the golden pocket, which is very rare, getting this close but not touching it. It does increase the probabilities for price to still move towards the downside to at least hit the golden pocket here, but also fill the 2-hour gap, because on the 2-hour time frame we have a gap over here, closed candles inside the gap, which increases the probabilities to sooner or later fill this gap. So that does increase the probabilities for the WXY scenario that I have shown earlier, compared to this being the low and continuation to the upside. However, in both of these scenarios we have some more room to move towards the upside, and then it very much depends on proof of resistance, because for the WXY we don't want to hit the 0.7, so that 0.7 on the chart that I've shown earlier would increase the probabilities for this scenario, where a B or 2 is finished and you look for a continuation towards the upside. If we go back to the daily time frame, then the bearish scenario here is a sideways double combo, a WXY, after which you want to see continuation to the upside. In this scenario, we have a regular flat in W, running flat in X, and look for a zigzag to the downside in a wave Y. Common target area for your wave Y is the yellow box here, 0.618 to the 1.236 trend base wave extension from the start to the end of W to the end of wave X, giving you a target area between 56.7k and 47.8k. The reason that the probabilities for this scenario are lowest compared to the diagonal structure ABC or potential continuation is because of the running flat in wave X here and in wave ABC. Wave C not taking the high of A leading to a running flat is very rare, never preferred unless all of the other scenarios fail. Now on the lower time frames, however, we are in a bearish scenario looking for impulsive structures to the downside, where this is either a 1-2-1-2 and you want to see a big move down, or we have a wave A, B, and then eventually a 1-2-3-4-5 bigger C to the downside because you want to take this low over here. What is a bit of an issue for this scenario is time, however, because in both cases you are then looking for a wave 1, 2 and then a wave 3 towards the downside, but this wave 2 here is 9 times longer than your wave 1, which is very rare that a wave 2 is that long compared to your wave 1. It increases probabilities that even if we move towards the downside and take this local low, it is a corrective structure after which we expect continuation up to take the high compared to continuing down and taking the low here. Also, if this is the high of your wave 2 and we are looking for impulsive continuation to the downside, then on the lower time frames we have a bounce towards the upside and then another 1-2, and this wave 2 then hit the 886, and the 886 is very rare for 2, common for a wave B or a wave X, increasing the probabilities that this move to the downside here is corrective in a C or Y, which in turn increases probabilities to sooner or later take this high. And if we do again take this high, then this wave 2 is going to be 10, 11, maybe 12 times longer than this wave 1, which just significantly reduces probabilities for the bearish scenario. Now we do have some bullish CVD divergences, of course, on the 1 hour, higher low in price, lower low on the CVD, but it is important to locally see strength as well. And locally with this move to the downside, we have bullish CVD divergences with the low here, higher low in price, lower low on the CVD. Has to be said that this low here had one CVD divergence before and another one over here. Now the more CVD divergences you get with the same pivot, the lower the probabilities of it playing out, but the second CVD divergence is still okay. And we have to keep in mind this is an 886 touch taken from the high to the low, which increases probabilities anyway to sooner or later take the double top. We had some bearish CVD divergences here as well, but these have now been invalidated as price moved towards the upside. We have a lot of news this week on Tuesday, on Wednesday, on Thursday as well, right? Even on Sunday, there's something going on. So make sure you trade safe on these days around these hours. This is Central European time because it might increase the volatility on the chart. If we then look at the probabilities of the different scenarios, then on the daily time frame, the ABC or bullish scenario has the highest probability compared to the bearish WXY scenario. And on the 1 hour chart here, currently the probabilities would be higher for the WXY, as we have then a zigzag to the downside looking for an X and then another Y to the downside just to then hit the golden pocket and also fill the 2 hour gap. Now locally, this range over here is now 9 times longer than this impulsive structure to the downside, and we also have a local 886 touch, so it increases the probabilities to still move up and take 61.8k here sooner or later, where we could then be looking for a wave X over here towards the upside, and if we see proof of resistance, we might be looking for a wave Y towards the downside, right? Of course, the alternative is continuation if you hit that 0.7. However, we didn't fill the 2 hour gap, we just missed out on hitting the golden pocket as explained, so having another move towards the downside afterwards would be good to see. The alternative on number 2 here is that the bullish scenario has the second highest probabilities, that you have a finished ABC and you move up, but then you want to see that 0.7 hit, which is over here sitting at about 63.9k. And then on the third spot we have the bearish scenario, which is either a 1-2-1-2 continuation down, or wave A, B, and then a 1-2 and continuation down in a wave C. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.